So Starbucks stock actually had a huge hit where the stock price actually dropped almost 10% in a single day. I know a lot of people have been watching this company, a lot of people are waiting for an opportunity to get some exposure to Starbucks because in the long term this could be a good play. But today what I want to do is go with a deep dive analysis in Starbucks stock, look at some of the fundamentals, some of the technicals, the competitors, what are they doing differently from everyone else, and if there is potential in this company in the future. So let's find out if Starbucks is a buy. Welcome back guys to another video. If you like the series on a deep analysis on your favorite stocks, make sure to hit that subscribe button down below and drop a huge like on this video. Each and every one of those likes does show me support and does help me make more videos like this. But either way, getting right into it, today we're going to be talking about Starbucks and if Starbucks is a buy. So like I mentioned, Starbucks stock did take a hit. It dropped almost 10% in a single day. So let's dissect this company because a lot of people have been asking me the question now if Starbucks is a good buying opportunity. So if you're not too familiar with Starbucks, they're traded under the ticker symbol SBUX, and they're a coffee producer and a coffee chain as well. So they're a worldwide company in around 75 countries, and they have a total of 27,000 locations. So they're one of the largest, if not the largest, retailer or chain in the world. So if you've never walked into a Starbucks, what they do is they offer a variety of hot and cold beverages as well as foods, and they also allow customers to pay for these products through the Starbucks app. So Starbucks is also the leading coffee chain in the world, and they do sell their coffee beans in local grocery stores. If you want to taste Starbucks and want to pay the premium price in stores, you can go to your favorite grocery store and they most likely will have some Starbucks coffee beans or ground coffee beans in there for you to purchase. Now the competition is something that I always like to look at because I want to see what potential this industry has as well as how much of a market share Starbucks has compared to its competitors. So here in this coffee space or retail coffee space, you can see that we have competitors like McDonald's and Dunkin' Donuts. Now they also have competitors like Maxwell House and Folgers who sell their coffee in grocery stores. If you want to go purchase Starbucks in a grocery store, they have different competitors there as well. I do believe that McDonald's and Dunkin' Donuts also sells their coffee in grocery stores, so that's an even more competitive environment. Now Starbucks controls around 40% of the market share in this space, where the competitors like Dunkin' Donuts has around 22% and McDonald's is somewhere around this range as well. Now in the last year, if we look at the performance of their competitors versus Starbucks, McDonald's stock has actually gone up 7%, Dunkin' Donuts has gone up 26%, and Starbucks was actually down 4%. So it was the worst performer out of these three in the last year. Now during the last 12 months, Starbucks did have a lot of stuff going on with analysts, especially in the last couple of days, because a lot of downgrades did come into this stock, which does change the outlook on it. So right now as it stands, we have 5 analysts that are bullish on the stock, no analysts surprisingly that are bearish, but we do have 11 analysts that are neutral on the stock now. Now the average price target for all these analysts for this stock is around $61.67, and that's still slightly higher from where we are today, which is around $52 or so. Now the technicals for Starbucks did look pretty good up until we had this massive break of this uptrend support level. So I was watching this support level for a while. You can see the stock respected it quite a few times. If you zoom out on the time range, you can see it tested it even more and it respected this level for the longest time. But recently, like you noticed, Starbucks stock did drop almost 10%. And with this, we actually gapped down below this support level. And now we're actually hovering around the 200-day moving average on the weekly, which is a very, very strong support level for the stock. And if this doesn't hold, we could see a lot more downside in the stock. So I'm suspecting that people who have been waiting for the stock will look at this as a key level to enter, which will start pushing the stock price higher. But as of right now, there's still a lot of selling pressure, so you have to keep that in mind. Now, if you zoom out to a wider time range, you can see that the consolidation range has really been between $55 and $65 for Starbucks in the last 3 years. So the stock price has not really done too much, where the S&P has actually been performing really well and their competitors have been performing really well. Now, a quick look at the fundamentals for this company. So Starbucks actually has a PE of around 18 with a forward PE of around 20-21 or so. Now the competitors, McDonald's has a forward PE of around 19, almost 20, and Dunkin' Donuts has around a 23 forward PE. So Starbucks kind of falls right in between these, pretty much average with the industry. Now they do pay a dividend, and they do pay out a $1.20 per share dividend, which equates to around 2% yield. So that's not too bad considering this is still a potential growth stock. So as Starbucks continues to expand worldwide, I would suspect that they would just keep increasing this dividend to entice more investors to go and kind of purchase the stock, especially for the long term, and just have that in their portfolio. Now, a quick look at the balance sheet doesn't really give me too much confidence here. Cash and investments for this company is around 3.7 billion, debt's around almost 4 billion. So the cash to debt ratio is around 0.944. So like I said, I like to see at least a 1-to-1 ratio, ideally something like a 2 or a 3 or a 4-to-1 ratio in terms of the cash to debt. I do like to see companies that have a lot of cash on hand, because if we do experience some sort of economic downturn or there's some problems with the company, I want to make sure that they have enough cash on hand to pay for that and get their way out of that and not enter some sort of bankruptcy state. Now here's the fun part, which everyone loves to look at, and it's the numbers. And we get to see here how the stock has performed over the last 4 or 5 years or so. So if you look at this table here, you can see that the revenue has been consistently increasing over the last 4 years, which is a great sign for the stock. The operating income and net income have also been increasing, so we have green across the board here. But the only concern that I have is that their increase has actually started slowing down. So if you look at the revenue increase, yes, it did increase year over year, but it has been slowing. So 3 years ago, we had a 16% jump, then we only had 11%, then a 5%, and now the last 12 months is around 4.8%. So that is slowing down, which is not really a good sign per se, but they are doing some things, which I'll talk about in a minute, where they will see some sort of revenue boost, hopefully, and that'll trickle down to the operating income and net income as well. Now their capital spending is a little bit concerning, but again, this is a retail type company, so they do have a lot of property, a lot of leases and all of that stuff. So I do suspect as they continue to grow in China and purchase more property and build more stores, that their spending will keep going up. But as long as their profits and their revenue stays consistently rising, this shouldn't be too much of a problem. Now, of course, if you look at the stock performance, recently it got hit like we talked about, and it's actually down quite significantly. And the reason, of course, was because that analysts had come out and they did say that they expect Chinese stores year-over-year sales to be pretty much flat, and investors were obviously expecting some sort of rise year-over-year for the revenue and for the profit and for the growth. So this, of course, came as a big surprise, and a lot of people started selling the stock because there were a slew of downgrades, as we just saw a few slides ago. So a visual here of their performance in terms of their revenue, their profits, their spending, and their stock price. You can see here that the stock price is pretty much mimicking their operating income. So as their operating income is dropping, so is their stock price. So if they can figure out a way to kind of increase that operating income, start being more profitable in that sense, I don't have any doubt that the stock price will actually follow suit as well. So the big question here is Starbucks a buy? So like we talked about, Starbucks has some big competition in this space, but they are still the #1 leader for coffee worldwide. Now, they have a hopeful expansion that they're doing in China. There's a lot of hope for that. I mean, everyone's expecting their Chinese stores to do incredibly well over the long term. Maybe in the short term, people still have to adapt to it. China's not really too much of a coffee drinker yet, but they do suspect that over time they will convert and they will start drinking more and more coffee, and Starbucks wants to be the leader and the go-to place for that. That being said, like I did mention, analysts had come out and downgrade the stock because the performance year over year right now is pretty poor, which is why we had almost a 10% drop in the stock price. Now, Starbucks is continuing to push into China. They're not going to slow down just because of this analyst drop and all of that. And they do believe that the future profit zone for the company really is in China. They've kind of dominated the United States. They've dominated a lot of these countries that they've been in for the last few years, but China is one that they're struggling a bit in, but they do believe that they can figure out the formula to really go in there and be the dominant, profitable space for hot beverages, cold beverages, and maybe even food. So overall, really, the numbers look strong. The revenues and profits are rising year over year, which is always a good thing. And if you're looking for a long-term hold in the restaurant space, if you want to diversify yourself a little bit, Starbucks, I think, is currently at an excellent value with that 2% dividend yield as a bonus. So I do believe that their expansion in China will eventually turn more profit than expected. I think it'll be a long-term play, not so much a short-term play. So it might be a 5, even a 10-year hold to see the stock turn around and actually be very profitable. But that being said, with all of these hopes and expectations for the stock for the long term, I do believe that Starbucks is a buy at current prices. So let me know down below if you guys enjoyed this video. Let me know what stock you want me to cover next. Drop a huge like on this. Let's get at least 50 likes on this video. Let me know if you're buying Starbucks stock. But either way, guys, thank you so much for watching. I'll see you in the next one. Do not forget to invest positively.